Many real estate investors across Canada, including in major markets like Toronto, Vancouver, and Calgary, struggle with challenges that lead to failed investments. It's frustrating to think you've done everything right only to watch it fall apart. But understanding the most common pitfalls can help investors make better decisions and avoid costly mistakes. Hi, my name is Darren. Let me take you back to 2020. I had just bought a pre-construction townhouse in Ajax. On paper, it seemed like the perfect move. I was upsizing from a condo, it looked like a smart investment, and I felt like I was finally making progress toward long-term financial growth. I had done my research, secured financing, and everything felt solid. And then COVID-19 hit. The market shifted, interest rates shot through the roof, and suddenly the numbers didn't make sense anymore. I was stuck. I ended up having to sell, and yeah, I took a loss. That alone was tough, but then I found out the house next door had a dark history. I didn't realize this then. It was awful, but that impacted the resale value of my townhouse. And a part of me judged myself and wondered if this wasn't for me. As usual, I always try to learn from my mistakes and use them as an opportunity to learn. Needless to say, that experience hit hard and taught me an important lesson. Even when you feel like you've done everything right, real estate can still throw you a curveball. That's why I want to talk about the real reasons real estate investments fail, especially here in Canada, and more importantly, what you can actually do about it. Let's start with the money side of things. You'd be surprised how many investors dive in without a clear understanding of what the long-term financial picture looks like. It's easy to get caught up in the excitement. You think, prices are going up, I better jump in now, but then the bills start rolling in. Property taxes, insurance, unexpected repairs, and the dreaded moment when your unit sits empty. If you're over-leveraged or haven't built a reserve, those unexpected hits can crush you. So, the fact that you are still here and listening tells me you're intelligent enough to discern and open enough to learn. I watched people lose great properties just because interest rates ticked up and they didn't have any wiggle room. That's why I always ask, what happens if the worst case scenario hits? Can you still hold on? If the answer is no, it's time to rethink the numbers before you buy. Then there's the market itself. It's one thing to buy in a hot area, but markets are cool. Suddenly, that sure thing isn't so sure anymore. Prices dip, rents flatten, and vacancies go up. And when jobs disappear in a neighborhood, tenants are harder to find. You've got to think long term. What's the economic outlook? Are people moving there? Are jobs being created? That's the kind of stuff that keeps your investment strong when things get rocky. But it's not just about where you buy, it's how you manage what you've got. I've heard some wild tenant stories, people who stop paying rent, damage the unit, or drag landlords through endless legal disputes. And if you're not keeping up with the property, small issues can snowball fast. That leaky faucet leads to a mold problem, which turns into an unexpected renovation bill. So if you're not the hands-on type, bring someone in who is. Good property management pays for itself. And always screen your tenants properly. Trust me, it's worth the extra time up front. Then there's the emotional side of things. Yeah, real estate gets emotional. FOMO is real. You see friends buying, influencers talking about their passive income, and suddenly you're feeling like you're missing out. That's when people make quick decisions. They skip the math, ignore the red flags, and chase appreciation instead of focusing on real cash flow. It is a recipe for regret. You've got to treat it like a business. Ask yourself, why are you investing? Is it for cash flow, long-term equity, something else? And what's your exit plan? Because if you don't know how you'll get out, you might end up stuck longer than you want to be. And let's not forget the legal stuff. Real estate laws in Canada are no joke. One small oversight, like misunderstanding tenant rights, zoning, or tax rules, can cost you big. Add to that the fact that real estate is illiquid, meaning you can't just cash out quickly if things go south. If you're not working with a solid real estate lawyer or advisor, you're flying blind, and trust me, that never ends well. So where does that leave us? At the end of the day, successful real estate investing isn't just about finding the right property, it's about playing the long game. It's about planning ahead financially, staying informed, and managing everything, from your property to your emotions, with clarity and strategy. If you get that right, real estate can absolutely build wealth. But if you don't, well, you already know how that story ends. Let's make sure your story is the kind that ends well. If you're into real estate, or even just thinking about getting started, and you want more real talk like this, go ahead and hit that subscribe button. 95% of you watching this video are not subscribed. We've got more videos coming that dive into the Canadian market, break down what's really going on, and help you make smarter moves. And hey, if you're serious about investing and want some guidance tailored to your situation, book a consultation. I'd love to help you avoid the mistakes I made and set you up with a solid plan moving forward.